Good day, participants. Today we would be discussing about chapter number 14 of CFP2. The subject is insurance management and risk planning, and the subject is insurance of business risk, which is given in chapter number 14 of this module. This subject mainly deals with the various business risks and the various insurances to mitigate those risks. And this also deals with the key person insurance. What is key person insurance? Well, as an introduction, let's talk about insurance of business risk. Well, a business firm needs life insurance because of various factors. Life insurance also, and various other general insurances also. Life insurance in the sense that it needs to take life insurance on its employees, because it wants to give them retirement benefits, it wants to cover their death risk during their service tenure. So therefore, there is a group insurance also, and which the employer takes on employees. Similarly, an organization can also take insurance on one of its key employees, which is known as key person insurance, which we would be talking about. Then in the case of a partnership firm, there is a joint life insurance which is meant for partnership firms. That is, two or more partners can take insurance on, can take a joint life insurance policy, so that if one of the partner dies, and in the case of the death of one of the partner, the other partner will not have to liquidate the assets of the business firm and will not be required to give the share to the deceased person's family. So that share would be given by the life insurance company in the form of sum assured. Similarly, a business firm would also need insurance, various kind of insurance which we have studied in the earlier chapters, like fire insurance, like insurance against other natural calamities, like insurance for burglary, etc. Now let's talk about key person insurance. Key person insurance, many times you will find that in organization there would be one or two key personnel who are important to the company because of their professional skills, because of their knowledge, because of their experience. So their presence is crucial for running the firm's operation. Sometimes because of technical expertise, many times because they have creditworthiness of the company because of them, and many times they enjoy the goodwill of the creditors, of the suppliers, of the customers. So therefore, the persona of the person is very important in the organization. And sometimes it may happen that if this so-called key person dies, the organization may come into a problem. The organization may lose its important customers, the organization may lose some important contracts, the organization may lose its trust or confidence with its creditor or lending institutions or financial institutions. So therefore, there is a lot of stake in this particular individual from the point of view of the business company. So there is a provision of a specialized type of insurance which is known as key person insurance, wherein the organization can take the insurance on its key person. In this case, the insurance premium would be paid by the organization, and the life assured would be this key person. The premium which the organization pays is treated as a business expense by the organization, whereas in case, unfortunately, if the key person dies within the tenure of the policy, then the life insurance proceeds, that is, the sum assured is given to the business firm and not to the nominee or to the family members of the deceased person, that is, not to the family members of the key person. Basically, this is not a personal insurance taken by a key person for the benefit of his family members or for the benefit of his dependents. Rather, it's insurance to take care of the financial needs of the organization, because there is a lot of stake on this person. So, and the benefit which is received by the firm in case of death of this key person would be termed as the income of the fund for assessment of its tax liability. Unlike for an individual, if the death proceeds are, they are non-taxable under section 1010D, but this section will not apply in this case because this insurance has been taken by the business organization. Now, let's consider what are the characteristics of a key person. Who can be called as a key person? Can anybody in the organization can be called as a key person? No. From the point of the view of the insurer also, this is very important that they should be satisfied that the concerned person is a key person. And from the income tax point of view also, income tax authorities also have to be convinced that the concerned person is a key person and his presence is crucial to the operations of the company. So as discussed earlier, a key person is considered to be an asset for the company, just like with the plant and machinery of the company. And the objective behind taking such a policy is to safeguard the firm against any financial loss which would result from the premature death of the person whose services are important for maintaining the profitability of the business. Now, what are the various kinds of insurance which can be given to this key person? Primarily, the insurance may be of temporary nature or the insurance may be of permanent nature. Why we say that the insurance can be of temporary nature? Temporary nature means it could be for just a few years, maybe say 5 years, 7 years or 10 years at the most. Temporary kind of insurance may be necessary for those people who are involved in some key research projects. Those research projects, once the research project is over, then sometimes there may be no need of the person or the person may take up assignments elsewhere, or secondly, the services of the person are no longer required and the person is not now a key person from that point of view. The person would be involved in the other regular operations of the company. So in that case, the insurance could be of temporary nature, just for a few years. Whereas permanent insurance means maybe of a whole life nature or an endowment plan for a very long term, when the services of the individual are expected to be for a fairly long period of time or until the retirement of the person. Now, considering the type of policies which are given to this key person, usually we see that term insurance is usually given to such key persons because, number one, why? Basically because it's very easier to maintain, it's easier to administer. Since there is no maturity value, the premium is also less, so insurance companies find it easier to pay that small amount of premium. Secondly, in case the said key person leaves the company, resigns from the company, or so there is no problem in adjusting the maturity amount, because since it's not an endowment plan. So okay, then the insurance will stop. The insurance company, the employer would stop the further insurance. But on the other hand, endowment plans are also taken in case of those key persons who are expected to be of a permanent nature, who are expected to be associated with the company for a fairly long time, and those who are expected to be with the company till their retirement. So many times such kind of endowment plans are taken and they are considered to be as a retirement plan also, and the maturity amount is then given to them on their retirement as a parting gift. So the term of the plan is adjusted in such a manner that the term ends at the retirement of the key person. So that is another form of key person insurance. Sometimes whole life insurance is also taken by the organizations. Now coming to other types of insurance, we will consider other types of insurance like business assets insurance. Business assets insurance, there are two important areas of business assets insurance. Number one is property insurance and number two is contents insurance. Well, these names, property insurance, contents insurance, they are not prevalent insurances in India by this name particularly. These names are more prevalent in America or other European countries. In India, we have several forms of insurance like building insurance, like contents. We don't call it contents insurance, we call it insurance of the stocks of the company, say warehouse stocks, etc. But property insurance covers insurance that is risk covered to the buildings from fire, from various natural calamities, or equipment from destruction or damage. Similarly, there are contents insurance, contents of a warehouse, contents of a factory, contents of a showroom, retail. It could be a retail showroom, it could be a wholesale showroom, against various perils which could be, as we know it till now. like fire, flood, earthquake, theft, burglary. Then there can be other types of insurances which are known as business interruption insurance. Business interruption insurance in India, we call it by the name of consequential loss insurance. Consequential loss is when a loss has taken place, for example, in a factory, in a building, for example, in a business firm. So after the fire or after any calamity, so there is a loss of the business, there is loss of production. So in order to mitigate those kind of losses in the intervening period, those losses can be covered under this consequential loss as a consequence of one loss. So it's very necessary to that this insurance is also taken alongside like fire insurance or other contents insurance, because this insurance cannot be given independently without that insurance, because there is no meaning of this insurance then. For example, in the case of fire, let's say there is a fire in an industry. So during that intervening period when the fire had taken place, maybe the buildings had all engulfed in fire, so there was a damage to building, there were damage to machinery also because of machinery breakdown or because of damage due to fire. So in that period, the owner of the factory had to hire some other premises in order to run its production, because it has to pay some fixed cost to its labor, to its personnel, which are known as standing expenses, like basic electricity it has to meet, it has to meet some basic expenses like fixed costs like rents, electricity, etc. So therefore it has to run, then it has got some pending orders also, so it has to fulfill its commitment to complete those orders. So it might have to take some premises on hire, it might have to take some machinery also for hire till the time its machinery is set right by technical personnel. So during that period, whatever the expenses are incurred because of the loss and loss of profits, because of loss of profits would also be there. So those losses would be covered by this insurance. So this is a specialized type of insurance. So what are the various kind of trading losses which can be covered by consequential insurance? Number one, net profit of the company. It would be calculated, that is gross profit minus the standing charges or the fixed cost would give the net profit. So that would be given in the intervening period. What would have been the profit which the company would have earned in that period. Similarly, whatever is the increased cost of working because of hiring of extra personnel also, extra premises, extra machinery, etc., etc. And loss of profits is determined and measured with reference to reduction in turnover. So whenever such claim arises, insurance company hires the services of the surveyors and loss assessors. Such surveyors and loss assessors would be technical people also and would be chartered accountants also, who would determine the accounts from the accounts of the company, that what is the normal stock held by the company, what are the profits in the preceding financial year, and accordingly net profits would be computed and the insured person would be compensated for those kind of losses. So variable charges, standing charges and net profits are considered. Now, what is the indemnity period for such kind of consequential insurance or loss of profits insurance? Now, profits policy provides indemnity in respect of loss of gross profits during the indemnity period that is selected by the insured. Now, what is that period which can be selected by the insured? Indemnity period chosen by the insured business may vary between 3 months to 3 years. Now, it depends on the insured person that for how much period one wants to cover his or her indemnity. For example, and this period would be counted from the date when the actual loss had taken place. That is, the loss due to fire or due to machinery breakdown has taken place. So after that, this loss would be counted. For example, a fire insurance has been taken. So the fire insurance tenure would be 1 year. But this consequential loss would extend beyond that period. This fire loss should happen during this tenure, but the consequential loss, the consequences of this loss would be felt even afterwards. So therefore, this could be up to 3 years. And indemnity period for loss of profits insurance is therefore different from the actual period of insurance. Now we have another form of insurance which is known as money insurance. We have very popular policies in India, especially for business firms, whether large business firms or small, even for small business firms, which we call as money in transit insurance. Many business firms, they have to deposit their cash to the bank, sometimes carry the cash from the bank to the business premises. So during that intervening period, while the money is in transit, there could be instances of robbery, snatching of the money, or hijacking of the vehicle. So these kind of instances can be covered under money in transit insurance. The money could be in many large industries. In earlier days, the company's accounts people used to go to the bank to draw out huge cash to pay wages to the laborers, to their employees, and they used to be accompanied by security guards so that there is no instance on the way. So that period is covered. Secondly, in those industries, while disbursing the funds also, sometimes there could be a robbery attempt also. Or sometimes the money has been brought from the bank, but it will be distributed, say, in the period of 2 or 3 days. So during that meantime, it is kept in the safe with the company only. So during that time also, there can be a robbery. There can be a breakage of the lockers in the company premises. So that thing can also be covered. That can be covered through an extension. But in these cases, where there is a regular transaction, and even with wholesalers and other business firms, there are regular transaction hours also, and sometimes there is a transaction with 1 or 2 banks only. So those banks have to be specified so that that distance is taken under notice by the insurance company, and accordingly a premium is charged from the business firm. Now these money insurances, there is a further corollary to these money insurance. There is another form of insurance which is known as Fidelity Insurance, Fidelity Guarantee Insurance. But further to this, in money policy, there can be extension of infidelity of employees. For example, due to any fraud, case of cheating by the employee, so that is known as infidelity of employees. So this portion can also be covered under money insurance. Sometimes it may happen that a particular employee is carrying the cash to the bank or bringing the cash from the bank. He may stage a robbery. He can make a bit. He can, you can say, stage manage the robbery. Show that it's a robbery that he or she was looted on the way, and on the other hand, it was just a pre-attempted robbery kind of thing. So that would be a case of fraud and cheating by the person. Now, I was talking about Fidelity Guarantee Insurance. This type of insurance covers the employer for any direct financial loss that has to be suffered due to employees' dishonesty. Now this is employees' dishonesty in general, not in while carrying the cash in transit. This is a separate kind of insurance wherein there could be any kind of case of fraud, any kind of breach of fiduciary relationship where the money is kept with an employee, or there has been some misappropriation of funds or embezzlement of funds, or case of forgery or cheating from the employee. So that kind of breach of fiduciary relationship is covered under Fidelity Guarantee Insurance. So there are various types of policies. It could be issued as an individual policy, it could be issued as a collective policy, as a floating policy. Floating policy means the company may be having offices at various locations across the country. So therefore it will extend to various places. For example, this employee is transferred from one place to another, or the cash is being transferred, or the accounts are being transferred from one place to another place. So therefore it will be a floater policy. It's not that it will be only applicable in a particular geographical region. It would be applicable in the other geographical regions where the offices of the companies are located. Similarly, there can be blanket policy. Blanket policy means that it covers all the employees of the company in general. In individual policy, it covers only just one specified employee, the employee who is crucial, from the financial point of view. And collective policy, the company may name, say, 4 or 5 people that we want to cover these people under Fidelity Guarantee Insurance. Blanket policy means, as a overall blanket, it has covered all the employees of the country under Fidelity Guarantee Insurance. Now, there is another form of insurance which is known as business liability insurance. Well, as we know that commercial business is subjected to various kinds of liabilities. It can be subjected to various kinds of liabilities. Like it has got liability towards its employees, it has got liability towards its customers, liability of goodwill, liability to provide the good products in the case of customers, non-defective products, good service in the case of employees. It has the duty to provide the right working environment, safe working environment. So in case there is a injury to the employee or there is a death to the employee, so definitely the liability comes on the employer. So in those cases, many times in the case of manufacturing firms, there are large number of employees, there are large number of workers who are working in the factory, working with machines. There could be any kind of injury or death during course of employment. So that kind of compensation has to be given by the employer, which is covered by the insurance company in such cases. Similarly, there can be liability because of faulty products. So the business firm has to pay a large compensation. So such kind of compensation are also taken care of by insurance company. Similarly, there can be other lawsuits also for the business company due to pollution, extraction of other chemical substances and others plot on others factories, etc., etc. So these were the various kinds of insurances.